Okay, session's being recorded. This is a free market wrap-up webinar on a beautiful and hot Friday afternoon, approximately 4:16 p.m. New York time, right here on the waterfront across from New York City. This is Clueless A Trading Frank, and session's being recorded. It will be uploaded to the Clueless A Trading YouTube channel, which all of you are familiar with. Just make sure that you subscribe to it. Just put your email in there so that anytime I put anything up there on my videocasts, which are extremely beneficial to say the least for people who listen to them and have listened to them previously, then you get notified immediately via email. Simple. First of all, I want to welcome, a very warm welcome to a lot of new faces over the past couple of weeks. Not everyone's here, obviously, but a few of the ones who came in this week as a group, and hopefully many of you will not just do the free trial, but stay with us, and we certainly encourage that. A very warm welcome to all of you. First of all, instead of rehashing how to navigate my site and what you need to do, the simplest way I can describe it is that you need to be attached, literally glued, to the Twitter real-time feed. The best conduit of content delivery, for now at least, has been the Twitter real-time feed, what's at Clueless8RT. R standing for real, T standing for time. Clueless8 real-time. Okay? I call it an RT feed. Sorry, I have a little bit of a cold, so I'm a little bit clogged up. So, make a long story short, the Twitter feed is where all my posts, all my content, trade alerts, charts, comments, and anything that's going to be directly affecting your trading is delivered purely on the real-time feed. The chat room is there for general discussion. Sometimes I express my opinions on certain things, and of course I try to be as engaged as possible, as you all seen over the last couple of days, especially the newer members, on a 24/7 basis during market hours. Anybody can sign into the chat room by signing onto the website, and of course they can be there after hours chatting with friends and stuff. That's all fine and good. Myself, I try to remain as engaged as possible between the hours of 8 or 9 till 4 p.m. But after that, I got to have some downtime on my own. No, that's it. But a lot of people, some of the newer members might think that the chat room is a very essential part of my service. It is, and it is not. It is essential because it gives you a bigger overview of what I'm thinking, what's going on, certain comments that I make about the general market conditions, stuff like that, which I also try to put up on the Twitter feed, but being a shortened word, what do you call, a restriction on the 140 character limit, I can only put so much on Twitter. However, the second aspect of my work, which is important in conjunction with these trade alerts and all my stuff, in order to understand why I do what I do and why it works 90% of the time, to be honest with you, is because is that you need to basically listen to the video cast, which I tend to do a couple of times a week, sometimes free market, sometimes end of the day, and I try to put one out there for end of the week, and that's, those are important, period. So how to really explore all the different resources and stuff that are available on my website, and keep in mind that my website version 2 will be available within the next 30 to 60 days or so. That will be much easier to not navigate necessarily, but to retrieve content, and so all that is coming, but whatever's there right now, feel free to browse through. This particular video cast, which I've done for newer members recently, is something that'll explain to you what you need to find or do on my service. Okay, and it's right there. It's on YouTube. It's Clueless8 Introduction, Back to Basics, Chart Patterns and Analysis. This is it also goes into a little bit about some basic chart patterns and things like that I utilize consistently on my charting, and so this is important. Okay, so the link to this I am putting up Marcus, one question at a time. The ACS this weekend is going to be held on Sunday. It is most probably going to be on Sunday evening. And if I do have time, I'll be doing it on Sunday morning. You'll be notified on that on the Twitter feed. That's it. Then so we have, sorry. So this is a critical tutorial video in the sense that it gives you the basics of what you need to do to get up and start running on my service. I want to point out to all the new members that the Clueless Day Trading Service is a bit of a learning curve. In fact, it's a bit of a steep learning curve, because the way I look at things and the way I practice my business is that you got to know some stuff on your own. You got to put in some grunt work so that you understand all the different messages that are coming out of my charts, my trade alerts, my comments, so you can maximize the benefit of doing that. It is not something you're going to figure out in one day, but I make it as easy as possible for everyone, so that if they use a few of their brain cells, not asking them to use too many, mind you, okay, save some for a rainy day, you're going to see it. It can't be any easier than reading some of the levels, the lines, the arrows, and all that stuff. Now, how all those things mishmash and work together, that's what takes a little bit of education, and that's why many have signed up for the advanced coaching sessions. As our good member here, Marcus, just asked me when is the ACS session, and I said it's going to be either Sunday morning or it's going to be Sunday evening, when it's generally held, around 7 or 8 p.m., around that time, Eastern Standard Time. Okay, so please, this particular one, review it prior to attending any of the coaching sessions. And for the coaching sessions, you got to go in and there's enough introductory videos. But if you really want to get into it deep, you got to put in a few coins and sign up for the 5-pack session that's in the members area on the website. And you know what? My rates are dirt cheap. I want to keep it this way for now till the time comes when we're going to just put it up there in line with all the other services out there. But for now, enjoy the benefits of all these, lower fees that I charge in order to, join my service and do the coaching sessions and stuff like that. Okay, compared to the ones out there, basically, like I like to say, I pay my we pay our dog walker sometimes more than what I charge for people to make thousands of dollars, and that's a fact. So, introduction to back to basics, chart patterns and analysis. This is the link. Put it out there. I just put it out there again on the members public chat room. It's also on the website, but do listen to it. Okay, so we're out of that right now. Now, I'm going to go over a couple of quick charts here. I'm not going to get into some heavy-duty analysis, but I just want to show you guys a couple of things which is important. First and foremost, it seems like human behavior absolutely never changes. I've seen a few people who've actually changed, and I'm one of them, in the way I look at markets, and have adapted many of the lessons that I've learned, good, bad, and ugly, to actually advance my my skills and proficiency in trading and investing. Investing is, honestly speaking, behavioral game theory, which I talk about all the time. It's what really dominates, I would say, a good portion of how you're going to effectively manage your trades or your investment. And the cognitive bias that we have in there, where, either somebody's always scared, somebody thinks this market cannot go higher, which is a prevalent attitude right now. Okay, and it has been for a long time, mind you. Okay, for a long time. I don't want to get into it right now. We talk about all these things in detail in our coaching sessions and stuff. I explain all these different nuances about the market. But the bottom line is, what's going on is this market wants to go higher, and for many different reasons. And markets don't always need to have a fundamental reason why it wants to go higher. So get that through your head. There are technical reasons which can show that the market can easily hit 2160 and higher in just within a matter of days. we have a huge, massive macro short position that is being unwound. I talked about this weeks ago. I put it out there in my charts. And when those short positions unwind, believe me when I tell you, and you have seen these type of moves before, but tend to forget that these type of moves happen, like we saw here, all right, just as recently as February of this year. Look at the pattern symmetry of what's going on here. Forget about hardcore Elliott wave theory and all that garbage. It's not garbage, it's really good stuff, but still, look at the pattern symmetry of what's going on. One of the things I teach in a big way, there's no hidden secrets here, okay? No little black book which has the secret code to making, being successful in the markets. The pattern symmetry that developed here on this massive double bottom reversal, dragon bullish we call it, okay, in January of this year. Not too long ago, 7 months ago. Believe me when I tell you a similar story is developing here in this zone. These are structured volatility, which are dominated by, as we all know, algorithmic high-frequency trading programs, which basically, for a better choice of words, screw with your heads. And they've screwed with traders and investors' heads to the point where it's almost mush inside your brain. And every trader or that I speak to, or a member that I always make a point of, calling each of you and getting to know you a little bit. Not because I want to be your Dr. Phil or Oprah, but because I do want to help to a certain degree, but I do not want to babysit or change your diapers just because you're having a serious mental baggage issue which you can't get over with. That's something you got to work on. So the bottom line is that I lost my chain of thought there for a minute. Okay, so the bottom line is that a significant portion of the market, not just this big short unwind that's going on, short covering that's going on, because I read months ago, and we heard about this too. There was about a $9 trillion notional value of a short position on the market. $9 trillion? I can't even count that. Even the New Jersey lottery doesn't give you $9 trillion. So if that's being unwound slowly but surely, then just from a pure technical standpoint, the market can rise a lot more. Second factor, which I've seen happen over and over again, I keep on hearing this all the time. I'm talking over the last 10 years or more, since 2009 for sure, that the market's overvalued. For God's sakes, traders should get over this whole notion of overvaluation. Everyone wants to be a star analyst. Everyone wants to be a central banker who knows exactly how to run the world's global financial system. Get that over your head. Be humble. Be clueless. Because honestly, that's the only way you're going to learn what the reality of the world is. Okay? There are services out there which keep on, they all have a method. It's all BS. They're wrong 90% of the time. Yeah, they're right on certain aspects, of course. On a rising market, it doesn't take a rocket scientist to figure out that, okay, you buy this, it goes up a little bit, or if the market's falling a little bit. But what about real predictive analytics and forecasting? None of them, most of them, I would say, are not even close to it. They're all trying to go with the herd like lemmings. Well, I try not to do that. And so far, I've been successful in staying away from that herd mentality. People say everyone's excited. There's a guy in Stock Twist today posted this exuberance. Where is the exuberance? I don't find exuberance in myself. I'm still trading with, playing defense, playing offense, but it's kind of still a little cautious. I'm not throwing away a caution to the wind and saying, that's it, go out there and, put out 60, 70% of your trading capital out there in one large position, which I know it's going to work. Look at how many of my positions work. I'm not doing that. I'm still capping it below 40% and still doing well. So what about the rest of them? God help them. So no one's exuberant when I tell you that, okay? On a institutional front, what's going on is you have these fund managers who are severely underinvested. No question about it. Hedge funds who were part of that big short game got blasted and had one huge lottery ticket that was Brexit, and they managed to unwind their positions to a large degree. When you get Brexit like this, okay, 2 days, and now we're here, and you get a reversal of this magnitude, which we had pointed right off the bottom, off the second channel. These are all drawings that I do. Bottom line was, I said it's a 3-candle move, and it did. The 4th candle was up a little bit, and then we pulled back a little bit, all kinds of good stuff. The fact is that the majority are still bearish, and this is my saying. Bulls are scared because the market's running like big time. Today was like a 10-to-1 up day, meaning that almost 9 issues, 9 issues were up for 1 down, or 9-to-1 up day, whatever. The advanced decline was almost 7. Yeah, almost 7-to-1. It's a powerful moves. Big participation, breadth strong. These are the things you want to see on a technical basis. So the bottom line is what's happening is those things are happening and they're coming in, but the average trader or investor is nowhere in sight. They're all sitting there, waiting for the next Brexit. And again, talking about Brexit, I don't think many traders even understand what the heck this Brexit was all about. So we won't even go there. No, just by listening to your local commentator on CNBC and reading the garbage in the newspapers is not going to tell you what Brexit was all about. There's a lot of hidden layers on what's going on. The real Brexit might not even happen. I won't even get into it right now. All right? A real Brexit is when you truly disassociate from the European Union, Britain leaves. It might not even happen on a technical basis. So saying all that, it doesn't mean you need to be hog-wild and be uber bullish on what's happening with the markets. It means you have to be tactically positioned where you make the most out of the markets in whichever directional move that you're moving. And if you miss that opportunity, you're just not going to do it. It's going to be the same old story. Yes, I bought and now I'm down. How many times have you heard that voice tell you in your head? So tactical modification, behavioral modification, understanding tactical movements in the market, understanding a little bit of the macro global aspects, which I don't want to expect people to really understand unless they're really into this stuff, right? I explained a lot of those things, will help you make more money than you have done before, in my humble opinion. All right, that's it. What is going on right now is a tsunami of short covering and cash on the sidelines coming in. In very simple terms, today's job report vindicated the bulls, the bulls on the U.S. economy who believed that the previous job report, which if I remember correctly, showed 38,000 jobs created. And even then the market turned that day and we played that reversal. I'm sure many of you members who were with me at that time remember that very well. I did not panic. I walked people through the pullback and then the reversal up, and it ended up green. I don't think any of the other services did that as effectively as we did. The bottom line is that in simple terms, with a so-called, whatever the number is, 287,000, they're saying the real number was actually 147,000, whichever the case. The stronger triple, 200,000 plus job creation, or 147,000 plus job creation, validates the point that the U.S. is not going into a recession. But more importantly, the Fed now has the ammo needed to go ahead and raise rates. Now, whether they raise rates at the end of July or whether they raise rates in August or September, whatever the case may be, they are at this point going to raise rates. It is no longer the case for negative interest rates, which was scaring the living daylights out of many people. Okay? That in the US we might have negative interest rates. It's completely out of the picture. I never thought it was going to happen anyway. So that's really what drove markets. If you want to look at it, from an economic standpoint, strong jobs report means the U.S. economy is on strong footing, overall strong footing, and that they will be in a position to raise rates. And that's great overall, because these horrendously low rates on the 10-year bond at 1.37%, and banks basically kind of flailing around down here because they don't have a spread to work on because the curve is so bad, the yield curve, some of those fears will be mitigated. So you should quote unquote expect to see financials are performing. So saying all that, my charts are all there for everyone to see. Everything that was drawn from weeks ago, this one included. This is a chart of the market, the S&P 500 E-minis. I had drawn these fan lines, and look where we are. We are exactly there. Some people might say, okay, that's it. We're going to hit the previous top and we're going to crash and burn. It doesn't work like that. Because it's simple laws of nature. When you keep on hitting a ceiling, the ceiling's going to crack higher. When you keep on hitting a floor repeatedly, it's going to get weaker and you're going to fall. Simple laws of physics. So at this point, in my opinion, there will be an overshoot. And that overshoot will bring us up here towards the upper Bollinger on the dailies, on the E-minis at around 2153, which translates roughly into 2160 for the S&P 500, where from today, you're talking about another possibly 200 points, which matches with what I think is going to happen to the Dow Jones, where we're going to have a intermediate term top on the Dow Jones of around 18,300. Or 18,350. Some of you new members who came by this week, and I talked to some of you, and you saw the charts and stuff, you were thoroughly impressed, and you should be, because every single level that was talked about in very choppy, volatile markets, including yesterday, were hit. I didn't just wake up. I didn't just, just make these things up and say, oh yeah, we're going to go higher into the jobs report. No, because all the technicals that I look at in my own way, because I'm not a traditional technical analyst, okay, mix it with the backdrop of what's going on. The overall sentiment is just fear. It is, believe me. Told me that it was going to go higher. Did I think that we're going to hit 2130 today? No. I thought we'd leave it for Monday. But big, the big fat short unwind and the squeeze brought us up to 2131.71 in the markets today. So at this point, yes, we do have a little bit of room to move higher, but more importantly, we have sectors which are far from their 52-week highs. And that was my next point that I wanted to make, to refute the argument that everything is overvalued and at highs. The market might be towards highs, but look at how many. This is what really is the greatest part of the long story. There are so many significant sectors, such as the biotech index, for example, one of the finest sectors of the U.S. tech revolution, the finest minds, U.S. exceptionalism, biotechs. No one even comes close to us. Nobody. All right? Look at this chart. Even a fifth grader, like I like to say, can look at this chart and say, you know what? This got a lot of upside to go. Thank you very much. What more needs to be said? You got a massive, you got a rolling quadruple bottom telling you where the floor is. You got a top here, which is going to pop very soon. And then you got a zone here that it needs to cover. And that is a lot of money in a lot of these biotechs that we play. We need to be a little bit patient. We don't need to OD on drugs, all right? We need to buy them selectively and not jump on every single time they're down a little bit. I see so many comments in the chat room, and it's normal, I guess, for untrained retail minds. Oh my God, look, here comes a pullback. Oh, look at that, and then within 10, 15 minutes, they're big, bright green, and they're running. Case in point, Allergan. Case in point, Celgene. Case in point, Biomarine. Case in point, Sarepta. Tons of them. Not all biotechs are great. I'm not a biotech super uber specialist. I'm looking at charts in many, and I try to focus on the ones that I know. So the other lesson you all need to learn is stop jumping around like a monkey on a hot tin roof every single time it heats up a little bit. Markets, like life, are not linear and binary. They zigzag their way up. All right? Just the way when they come down, they don't go bang. They go like this, they go like this, they go like this. But traders seem to forget that all the time, which just amazes me. Amazes me. So they're always selling early, making a little bit, trying to console themselves by saying, oh yeah, I made a little bit. If you really want to be a peak performance player in any career, gotta go for the juggler, and especially in trading. Do I do it all the time? No, I don't do it all the time either. So you're not hearing, excuse my friend, some bullshit from some other service that tells you, oh yeah, I just went all the way through from A to Z. No, at least you can stagger your way up. But at least you should be in the game and not always sell out every single time the market pulls back if you want 100 points here or 50 points there. How are you going to change that mentality and baggage in your head? I have no idea. Maybe you need to slap yourself a couple of times. Maybe hit your head on the wall, get a headache, and then maybe you'll wake up and say, whoa, I see the light. I don't know. So the point is that there are many sectors out there and selected stocks in them, not just in the biotech side, which have a lot of room to move. So what I try to do is I try not always to chase new highs, but try to look for the ones which are, quote unquote, still buyable. And that's why they work so well. Now stocks like, so this is one sector, okay? So I was showing you about on the Russell 2000. This in my opinion, huge money maker. Yesterday I went out there, I put out this chart, I showed the dragon bullish formation. Look up those charts because I'm not going to bother pulling them in here right now, okay? It was the same chart, and I drew the dragon bullish W formation. I drew up on top of that. I laid out the calls on the, and these weren't even today's, these were next week's. The RUT 1155s. At that time, the RUT yesterday was at 1140 something, okay? So these were the 1155 expiring next week. Ladies and gentlemen, I gave it to all of you around $7 or $8. Ladies and gentlemen, they went to 26. And none of you were in it. In my opinion, that's pathetic. And if you don't think that you're pathetic for not even buying one, then don't be a trader. Because the biggest thing about trading is you need to get angry at yourself first. Get pissed at yourself. Only then will you see the fruits of learning and how you can change. From $6, $7, $8, they went to 26. These were not even this week's. This week's one, you guys don't even want to go there. They went from $2.62 to $23. From $2.62. These were the 1155s expiring today on the RUT. July 8th, 1155s. 262 to 23. 695%. You tell me how great, not forget about how great you'd feel, how confident you would be if you even did a little bit. Because confidence is what sets the stage for the next trade and the next investment. There's an old saying, confidence is contagious. It's contagious to your brain. All right? So it's there. So on top of that, is it over? No. Because if you look at the swing charts here on the daily that I've drawn here and I've shown people, okay, you're looking at an upper Bollinger of 1200 and an upper channel retest of 1225. So that's another 50 points from here that you can make on the Russell 2000. The Russell 2000 is the ultimate mover. And these patterns are just begging to be bought. Even if it pulls back a little bit, what you see here is a Texas bullhorn pattern. I used to call it the Texas bullhorn pattern. It's basically inverse head and shoulders. You got the left shoulder here, the right shoulder here, and it wants to bust a move. Now, can things change? Can another Brexit type of situation happen? Can something unravel in Italy and their banks really blow up big time because they're always stealing and cheating each other? You know, that's what Italian banks are doing. Okay, of course, but those are outlying factors that are always there. I'm giving you a technical probability of what might happen. So again, what it comes down to is the fact that, in my opinion, this has a heck of a lot more room to run because it's not even close to its 52-week highs. So if you don't want to chase new highs, then let's take a look at the weekly. The weekly is 1292. This is a weekly channel. Okay, let me move the downtrend line. And let's do this. It has entered the zone. This is the channel. Channel 1, 2, 3. So at this point, it's entered channel between channel 1 and 2. Upper end of 2 is what I just told you, around 1220. 50 points of the Russell 2000. Today, the Russell 2000 in one single day was up 28 points. It's only 2.4%. On 2.4%, on the weekly calls, you got an average of 400% return on your money. So do the math. Simple math. On a 2.5% move on the Russell 2000s, the average return on the weekly calls, this week's and next week's, the average return was 400 plus percent. So you get another 28-point day, which is coming. This one candle doesn't just disappear in one day. Okay? This is where the big money is stepping in. And this is on a weekly basis. This is the second week in a row that money is flowing into the Russell 2000. Okay? IWM and RUT. So that's it. So what I'm trying to get at, and from a wrap-up standpoint, is there are ample opportunities to make some serious money while the markets still want to go higher. And at one point or another, no question about it, I believe as the market approaches this 2160 level or so, we are going to get severely overbought. And at that point, we'll get another pullback. But these are the type of charts that I see on StockTwits and other forums. Because they can't believe this stuff is going on. I mean, to them, the market should always be down 10,000 points. So they're drawing it like this. I just don't get it. These are the general looking charts on the other forums. what are these guys thinking? I don't really care because I ain't their, I'm not their sugar daddy, so I don't really care. But honestly speaking, this type of drawings that I see all the time, they're always expecting a big crash. Why does it always have to be a massive move up or a massive move down? Why can't it be just the atypical retracements back and forth within a trading range? That's where you can make the most money. I'll go tactically short very soon. So the bottom line is that what I'm trying to get at is this dogmatic behavior, the manic depressive behavior of retail investors, retail traders, and pros is what's creating such confusion and heartache because they're missing out on making any money, to be honest with you. And now the chase game has begun on money coming back into the market in a way that fund managers are underinvested. They got to put money in. More than fund managers, it's hedge funds. So what I'm getting at is the markets don't always have to go nuts up or down. They can just trade within a wide trading range. And that is good enough for us. So I'll open the floor up for a question or two because there's a lot of stuff I can talk about, but it's been a long week and I need to devote some time to my family, take my dogs out, have a nice cold one. You know what? And thank God that we live in America, and despite all the problems and stuff that we have, we're still truly one of the greatest nations on earth. Believe me when I tell you, I've traveled enough to know that. So on that note, let me leave the floor open so you guys can ask me a question or two, if you have one. Any questions? None? You can type it in if you want. Can everyone hear me? I'm just wondering, is anyone there? Hi, is anyone there? Which commons do you like to look at? Lee, I do stocks like you would, like enough stocks that you won't even know how many I do. So what I suggest you do, and it's a good question, is to simply scroll through the Twitter feed and see all these stocks that I do. The only reason I'm talking about indices is because though that's the background that all stocks trade on. So unless we understand what the indices are doing, you're gonna basically lay an egg on the stocks that you're trading on those particular indices. So no, I do a lot of stocks, and then at the same time we do the SPX, the RUT, and primarily those two indices to trade the market long and short. Good question. Any other question? Which commons do you like to look at? Well, like I said, scroll down and you'll see I did a ton of individuals that the stocks that we were buying today, not a ton, some selected ones, so they're all there for you to see. Okay, no other questions, I believe. All right, I'm going to wrap this up. I'm going to put this up on the YouTube in about 20 minutes or so. I look forward to seeing you all next week. We will be having our advanced coaching session for our members who have paid for the advanced coaching sessions this weekend. It's either going to be Sunday morning or Sunday evening. I got to figure this out. In the meantime, stay well, get ready, and stop hiding in bunkers all the time. All right? Come out of the bunker, see what's going on. I show a very different view of the market in my own clueless trading kind of perspective, and be prepared for flexibility. Things change, you change. Nothing changes forever. These are fast-driven markets driven by computers. So false breakdowns and false breakouts are omnipresent. So as long as you accept that, you're going to be A-okay. You stay dogmatic, you're not going to be doing well in this type of market. Okay? So far, the upside seems intact. We could have a substantial correction. I think that comes towards the middle of the month. I'll explain all that on the advanced coaching sessions and my other video cast. We generally do get a significant pullback, plus minus 1 or 2 days, close to the 15, and I don't think it's going to be any different this time. And then, we'll go from there. Thank you and good night.